Back on Morning Trade Live, Intel will be in the spotlight this afternoon when the chip company reports earnings after the closing bell. Analysts expect an adjusted EPS of a penny and revenue of more than $13 billion. Shares are up more than 60% over the last 12 months, thanks in a large part to the US government taking a stake in the business and a partnership with Nvidia. So shares are up today, up 1.2% in trade. But let's just take a look at some of the other chip stocks, because we did see a sell-off across this space yesterday. But it looks like we're seeing a nice rebound for the likes of Nvidia, for instance, up almost 1%. AMD also up at 1.5%. Broadcom tracking higher, almost 2% on the session. So, as I said, the chips seem to be back on the table. So let's go inside out on Intel ahead of its earnings. Joining us now is Paul Powers, CEO of FISNA. Thank you so much, Paul, for your time. What's your expectations for earnings?
I think that we're going to see earnings continue to be a bit of a challenge for Intel for the near-term future. I think revenue is going to continue to do well, which is what you want to really focus on in the age of AI. But earnings continue to prove to be a little bit of a challenge for Intel. I think that we're going to see it struggle until probably into next year, maybe even in 2027, when we really start to see more earnings. Right now, it'd be more focused on cash flow.
Yeah, look, I mean, this is a very different Intel than it was 3 months ago when we heard them report the previous quarter, obviously with the government stakes coming from the US government, the partnerships with Nvidia, also the investments coming from SoftBank. But, I mean, you raise an interesting point that the challenges that plagued this company before continue and remain. So I'm just wondering, you know, what have you got to hear from this company in order to sort of reassure about that, particularly because it's the fab business that many out there say still needs a big customer?
Well, that's exactly what I'd be looking to see, right? Can they win big customers? Can they do so profitably? I mean, I think what they're announcing is the right stuff to be announcing. The direction that they're going seems to be the right direction to go in. The question is just, how are they going to execute? Are they going to be successful and profitable or not? They're announcing essentially a whole shakeup of the entire company. And they're doing it in what I think is a relatively smart way. That they're cutting down on a lot of costs that are unnecessary, but at the same time refocusing on where there's demand, and the demand is all over AI. And they've recognized that there's a massive opportunity on the hardware front and on the foundry front of Intel. And so I think that directionally, it seems like a logical direction to go in. It really just comes down to, can they execute? Can they win customers? And if revenue continues to grow, then earnings will eventually catch up. That's why I'm saying I personally would be looking more towards what's the revenue in the next couple of quarters versus what the earnings are.
Okay, and I'm just wondering, as far as the stock performance is concerned, obviously we've seen this nice rally over the course of the last couple of months with these big investments, and there is an expectation that with any more deals could come some further upside. But do you think that, without a big customer here is going to be able to cap how much upside we see in this? I mean, where do you see the stock going from here?
I think that you're going to need a couple of Lighthouse customers in order to see the stock really move, because the Lighthouse customers, unlike smaller individual ones, are going to have more of a signaling effect that, hey, Intel is a real serious player in this domain. And obviously they're a well-established, very a well-known American company, but they haven't really been. You don't necessarily associate the latest and greatest in AI with Intel just yet. You typically think of Nvidia or maybe AMD, but Intel doesn't really come to mind immediately for most people. And so if they can start to shift that perception by having a few more Lighthouse deals, then I think that we're going to see a pretty big jump in their stock. But if they don't, then I think it's going to be a long and slow game, and they'll have to get a lot of small wins to catch up.
Let's broaden it out to the rest of the chip space. I mean, we've heard some couple of earnings reports thus far, the likes of Texas Instruments, a bit of a disappointment there, certainly a lack of visibility, particularly on the autos and China business, which they have a large exposure to. But then Lam Research, obviously, which is behind the tools, which helps make the chips, was a solid performance there. I mean, which speaks to, obviously, what we're seeing them being exposed to, and that is memory. What are your thoughts so far on what we've seen from these chip players?
I think this is they're performing exactly how you would expect them to perform in a new area. I mean, not that AI is new, but the growth there is extreme. It's growing very, very rapidly, and there's obviously a very major push for us to reshore the latest chip building. And so you're seeing a lot of companies in the U.S. putting a lot of investment and capital and resources into advancing not only chipbuilding in general, but especially what we're able to produce here in the U.S. And you're going to see some of them struggle, some of them are going to pull ahead. But the fact that you start to see, you're seeing things like Lam, as you mentioned, where they're doing really well overall, shows that the industry as a whole is moving in the right direction, is certainly growing. The results of individual companies, when some of them are struggling and some of them are pulling ahead, is kind of what you expect to see in a relatively new domain.
Yeah, and then the next part of this conversation, which is already coming into the narrative, is whether we have enough energy to power all of this stuff as well. But Paul, we're going to leave it there. Thank you so much for your time today. Really appreciate it. Paul Powers, CEO of FISNA. Thanks so much. Let's trade it now with Tom White, host of Fast Market. Good day to you, Tom. What's your example trade for Intel? Looking bullish. Talk us through that.
Yeah, stocks had a great run so far this year, Sam, up over 80%. And the option market's pricing in a pretty hefty 9% move either way, about $3.40 in this name. Those partnerships, with the U.S. government, with Nvidia, piquing interest of investors here. So I looked at a strategy that's not really, an earnings type play that expires this week. I went out in duration to give myself some time on this for the story to develop. If you're bullish on this name, this strategy takes advantage of a move higher, but while also limiting your risk. So I went out to the December monthly option series, about 57 days to expiration. So you got plenty of time on this type of position, as opposed to maybe buying the shares of stock. This is a way to get upside exposure with limited risk. So going out to the December monthly cycle, buying the slightly in the money 37 strike call, and then against it to offset some of the cost on that bullish call purchase, we're going to sell the 43 strike call. So a bullish $6 wide call vertical to the upside. You're going to pay roughly about a $2 debit for that. So there's your risk, $200 per spread. That can expand to $6 if it gets above 43 into December expiration. Takes your break even up to 39 level. That's only just over 4% above the current share price. So well within what the option market's pricing in for a one-day move, right, of plus or minus 9% on this. So you only need a move of about 4% to get above that break even, and about 15% to get above the 43 level, but you've got 2 months in this position. Now, if the stock moves higher and goes above $40, $41 over the next couple of days, next couple of weeks, this type of strategy, because you're buying a directionally biased vertical, gives you that flexibility to say, hey, if this thing expands from $2 to $4 prior to expiration, or $5, maybe I can close this ahead of time. So it gives you that flexibility as far as trade management goes on this type of directionally biased trade.
Okay, a good look at Intel there, and an example trade ahead of this key earnings report later this afternoon. Thank you so much, Tom White, as always.